Hello once again. Today we talk about OCBC's earning release last Friday. Can OCBC share price one day grow to surpass $20? Before we begin, I am pleased to share that we have another upcoming live webinar in December where I will be conducting a masterclass on Zoom about ETF investing. You can start registering your interest in the link on the description section below. Take this opportunity to interact with me and the community by asking me questions and also share your thoughts on the topic. Hello everyone, welcome back to STA Club, the club for stock trading and analysis. This channel is dedicated to providing you with high quality tutorials, guides and insights that demystify the world of trading. Join us as we will share more trading secrets and valuable insights. To stay updated and to be the first to access these valuable resources, hit the subscribe button now. By subscribing, you're opening the door to a world of trading and maximizing your potential for success. Before we dive in, here's a quick disclaimer. The information in this video is for educational purposes only. It's not a call to buy or sell. Let's first talk about Singapore's banking system. Singapore's banks comprises of full banks, wholesale banks, merchant banks, and finance companies. The top three largest banks in Singapore by market capitalization are DBS, UOB, and OCBC. All these three banks are qualified full banks, where they all undertake activities such as deposit taking, cheque services, lending, and any other business regulated by MAS, such as financial advisory, insurance broking, and capital market services. These banks are also allowed to share their network of ATM services. So, of all the three banks in Singapore, which one do I think has the greatest growth potential? I would rank them in the following manner. The bank with the greatest potential for growth would be DBS, followed by OCBC. Unfortunately, UOB, in my opinion, would lag behind both banks in terms of expansion strategy. Today, we will instead be looking at OCBC's latest earnings, released last Friday. How did OCBC perform? OCBC reported a net profit of $1.98 billion for Q3 2025, up 9% from the previous quarter, and essentially flat year-on-year. Total income rose 7% quarter-on-quarter to $3.79 billion. Net interest income, the difference between the interest a financial institution earns on its interest-generating assets like loans and mortgages and the interest it pays on its interest-bearing liabilities such as customer deposits, declined 9% year-on-year and 2% quarter-on-quarter to $2.23 billion. Net interest margin compressed to 1.84% in the quarter, down 34 basis points year-on-year and 8 basis points quarter-on-quarter as a result of loan yields falling faster than funding costs. The bank flagged a cautious outlook as net interest income would be expected to decline by mid to high single digits in 2025, where net interest margin guidance would narrow to about 1.9% from the earlier 1.9 to 1.95%. However, OCBC's diversified business model, wealth management, insurance, and trading is paying off, helping to offset the pressure in interest margins. The stable asset quality is a positive, especially given broader economic and interest rate uncertainties. However, the bank is not immune to macro headwinds, such as lower yields from loans plus margin pressure, which could cause potential earnings drag ahead. The cautious guidance suggests management expects the margin rate environment and perhaps the broader economy to remain challenging. For investors of OCBC, while Q3 results beat expectations, much of the upside came from non-interest income rather than the core interest earning bank business. So, margin trends and loan deposit mix will be a key to watch. From its latest third quarter earnings update, the proportion of its interest income generating business held 58%, while its non-interest income generating business held 41%. Therefore, a major proportion of its business is still in the interest income business, where OCBC's overall business would be largely affected by the interest rate environment in the near term. However, OCBC already has plans to increase its non-interest income business by increasing its stake in its insurance associate Great Eastern Holdings, thereby strengthening its insurance and wealth business, which contributes to non-interest income. The bank has also recently announced a reorganization through integration of its securities business in Singapore, Hong Kong, and Indonesia into the Global Markets Division in July of 2025, a move to streamline trading and capital markets operations, which are a non-interest income source. OCBC is also actively growing its wealth management business, which comprises of its private banking, premier banking, insurance, asset management, and stockbroking businesses. Should their strategy be successful and that OCBC successfully executes them in the right timing, we could see its non-interest income business close the gap with its interest income businesses. With this, OCBC could be poised to see further increases in its market cap and valuation. So, will we see OCBC's share price go above the $20 mark by the next year? This is a challenging question to ask and would be subject to how the current CEO and management team execute its strategies on its non-interest income business going forward. Finally, can we invest in the stock right now? I would suggest to hold it out and wait for more clarity from its next earnings release. But for dividend investors, OCBC actually pays attractive dividends with a current dividend yield of 4.6% and could be a good for investors who do not mind collecting healthy dividends from the bank. I hope you have gained something from today's video. For more information on how you can optimize your portfolio and would like to seek advice on your current investment portfolio, speak to us by replying to the WhatsApp link in the comment section, and our team can provide a personal touch and talk to you about your investment plans. See you in my next video. Goodbye.